Gentlemen, welcome back to MGTOW Money and welcome to the end of 2018. Today's topic, why your ass hurts. Before we get to that, let me sincerely thank the ongoing support from the Patreon investors in this channel. Welcome Stephanie, the newest member of the MGTOW Money Army. Interesting screen name, Stephanie. In addition, over the holidays, I was reading an excellent book by a gentleman named who did achieve early retirement. I think he was around age 40. An excellent book by Todd Tressiter. See the link in the video description. It's a new book and it's titled The Leverage Equation: How to Work Less, Make More, and Cut 30 Years Off Your Retirement Plan. Highly recommend this book. See the video description today for a link to the book from Amazon. All right, on to today's topic, why your ass hurts. Gentlemen, I don't know about you. I don't consult an astrologer when I'm looking for an investment advice, and I assume you don't, or at least hopefully you don't. However, unfortunately, I suspect that many of you equivalently are seeking an astrologer or some sort of numerologist or something like that, because you're getting your investment advice from experts. You're getting your investment advice from gurus or even the YouTube commentators. And let me give it into some specifics in terms of what I'm talking about. And by the way, I highly recommend take a look at the slides that I'm including here. These are extremely important and go right along with what I'm talking about. For example, Thomas Lee. I'm including a slide from him. Thomas Lee's a man who throughout 2018, up until as recently as July, just 6 months ago, for example, was repeatedly saying that Bitcoin per Bitcoin was going to rise to $25,000 per Bitcoin by the end of 2018. He said this repeatedly. Bloomberg, CNBC, the Wall Street Journal, etc. Obviously, someone who is well credentialed, right? Obviously, someone who knows what they're talking about, right? Well, today, as I look at it, Bitcoin's sitting around $3,700. So obviously, far short of the $25,000 that he said. Oh, of course, now let me give him the benefit of the doubt. He, of course, backed off his claim in November, yes, last month, and said, well, it might only go to $10,000 to $15,000. So, Mr. Lee, congratulations. You were flat out wrong. Now, I won't also talk about the other analyst or expert guru, etc., from Saxo Bank, the well-known investment bank, where he predicted for 2018 that Bitcoin was going to hit, get ready, men, $100,000. This was the quote-unquote expert from 2017, and he predicted a rise to $100,000. Well, sir, evidently you missed it. I also won't go on to name any of the various YouTube creators who supported ideas of investing in ICOs, various cryptos, etc., nearly all of which are down an average of 80 to 90%. And oh, by the way, man, quick quiz question for you. If you're down 80% on an asset, no matter what that asset is, how much does the asset need to rise to get back to your 80%? So if you put in $100 and now you're down to $20, what percentage rise do you need? No, you don't need an 80% rise. You need a 400% rise. Sorry, man, that's just math. All right, next. The next reason why your ass hurts is because you held on too long. Specifically, your speculations, the things that you had hoped that were going to do well, have gone up and they've come right back down. In other words, men, you didn't take profits. I've stressed this before. I've mentioned this numerous times, the importance of using some sort of stop loss, using some sort of mental trailing price. So in other words, if it's gone up to $1,000 and it goes down to 800, 700, 600, at some point mentally, you know you're going to sell out. So for example, when Ethereum hit, let's see, approximately 1,400 in January of this year, I would have think that it certainly would have been reasonable to say, okay, well, if it gets to 1,000 or even 900, I'm going to get out. Well, gentlemen, right now, Ethereum's sitting about $1.30. So it's gone from 1,400 to 130. And I don't know how many people took profits. I hope they did. All right, next. You weren't diversified enough. I've mentioned this numerous times, especially about the importance of holding cash. I have mentioned the importance of at least holding some cash aside. 20%, 25% of your overall portfolio, holding it in straight cash, a money market fund, or even a short-term bond fund is always a good idea in my personal opinion. As I stressed several months ago, cash is not trash, especially in the Western world. If you're in the US, Canada, Australia, New Zealand, you're getting around about 2 to 2.5%, even 2.75% on your money. That's not bad, especially compared to 18 months ago. All right. How are you going to make money next year, which I know that's what you're looking for. Here's a few takeaways. 1, know this right up front. If you take nothing else from this video, listen carefully. No one cares more about your money than you do. No one. You are fully responsible for your investment decisions. Don't start trying to blame someone else for your poor decisions. Don't start saying, well, they said or they told me, etc. No, it was ultimately your choice to invest in that. You deal with it. 2, ignore the experts. Let me give you a quick example. How many experts at the beginning of 2018 were predicting that there would be a bear market in the stock market, in the U.S. stock market? Yes, men, we've recently hit a bear market as defined by that the stock market, the general overall stock market has declined by 20%. Very few people, I can tell you, especially among mainstream analysts, those gurus and experts that you see predicted any sort of bear market. And especially true, including myself, I was shocked that it happened in November and December. Again, being a very seasonally, generally speaking, historically speaking, a positive time for the stock market. This was a classic example of this wasn't supposed to happen, which ties to ignore the experts. Men, a lot of these guys, they're coin flippers. Inevitably, their bad predictions are forgotten. Inevitably, they're on to their next big thing. Listen to people, at least have an open mind to people who are using phrases like, in all probability, this is what I think is going to happen. I'm not exactly sure. Also, people that are stressing the importance of asset diversification in terms of being in various different things. Be very careful when you hear people talking about, specifically this year, this is going to happen. For example, if I tell you in 2019 that the stock market is going to increase 10%, 20%, 12%, whatever it might be, or if I tell you Bitcoin is going to double and it's going to go to 8,000 in 2019 or 20,000 in 2019, when I'm giving that specific detailed type of information, be very, very concerned because, of course, it goes right back to, remember, men, the future is uncertain. You don't know it. I don't know it. We're all just playing the odds. We're all just talking about probabilities. We don't know. 3, acknowledge that things can go wrong very, very quickly and very, very wrong. Always be thinking about your downside before you put your dollars to work. Before you put new money to work, a stock, a bond, etc., be prepared for the downside. If you only have $1,000 to invest, then maybe you need to think about, okay, if I lose this entire $1,000, how is that going to affect my life? Am I going to be able to pay my electric bill next month? If not, then maybe I shouldn't put all $1,000 to work. Maybe I should only put $500, etc. The point being, always think about the downside. Men, most importantly, for next year, you need to review and learn from your errors of this year. You need to think about, what did you do wrong? Because I virtually guarantee you, if you've been invested in the market this year, in any market this year, you're sitting on some losses. You're sitting on some things that you probably regret. You need to be thinking about, what could I have done better? If nothing else, you need to move more slowly in the future with your investments. You need to think a little bit more carefully about your investments. A real world example where fortunately I got lucky about this, late October of this year, 2018, I was getting hot to get some money in the stock market. The market was doing well. I'm thinking, man, I got to roll some money into this. So I started getting some money together in terms of from various accounts, etc. I'm getting ready to roll it in, and circumstances change. And then I backed off a little bit and I slowed down. And in retrospect, that was the best thing that could have happened. The point is, lesson I learned, go slowly. Because most importantly, men, listen carefully to finish up here. There is no FOMO. There is no fear of missing out. You are missing nothing. I'll virtually guarantee you, men, in the future, there will be another tremendous bull market, a tremendous way that you can put your money to work and you can make a lot of money. And hopefully I can bring it to you. Gentlemen, as always, hit the like button if you found this profitable. John Galt, out.